So I just got off the phone with my lender and I got a bit of bad news. This stimulus that the government is providing is actually causing more trouble for people trying to buy houses than it's helping. And I'm going to explain it in this video. So let's talk about it. So I just had a conversation with the lender that I work with a lot, and she had a conference call with her whole company, and there's some bad news. The stimulus that the federal government is providing, it's hopefully going to help some homeowners, but it's going to hurt those that are in the middle of the process of buying a house. And here's why. A forbearance is basically when the mortgage company allows you to skip payments and set up a payment arrangement because your finances are screwed up for one reason or another. And we all know it's because of a lot of people are getting laid off. And so it's great that the government's providing that. Here's where the problem occurs. They have put out regulations that is going to release some funding for corporations, including banks, to help those that have forbearances, and they're going to provide money for those who may have been laid off, but they haven't provided any rules or guidelines to the banks. Therefore, mortgage companies, mortgage brokers, those that warehouse loans, who typically sell their mortgages to bigger banks like Wells Fargo, Bank of America, etc., may end up having to buy loans back. And what happens is, if you buy a house today and you call the bank tomorrow and say, I can't make my first month's payment on my brand new house, they have no other choice but to allow you wiggle room, so to speak, but they don't know how much wiggle room they have to allow you, and they don't know what the recourse is, and therefore they're not buying those loans and requiring smaller brokers and mortgage companies to buy those loans back. So how this will play out in the short term, I think it's going to be bad for those who were on the cusp of just getting qualified, just barely had credit scores high enough to qualify, and they're going to essentially not be qualified anymore. And this isn't just for new loans. This is for people who have already been pre-qualified, already had an accepted offer, already went through the inspection period, and literally are ready to close. If their score is too low, and it depends on which lender you're working with, they may not be able to get that loan. So if that is you, if you're an agent and you have a client and that applies to them, you may want to check with the lender and see if their credit score requirements have gone up. So all is not doom and gloom. There are some things that you can do if this situation applies to you or someone you know. What I suggest you do is, first of all, like I said, call your lender. Find out if their requirements have changed and if you still qualify. If you don't, it doesn't mean you won't qualify. You can go elsewhere and see if another lender may be willing to do the mortgage for you. Just keep trying is my basic point here. Don't give up just because one lender says no. What one lender says no to, another may say yes to. And the second thing I'll say is that I really believe this is short term. I think that some time has to go by. The federal government has to iron out some details. They have to give some rules and regulations to the industries, to the corporations that they're providing these stimuluses to, and that they're requiring to basically forgive debt to, so that they're not violating any laws. And once lenders feel a little bit more comfortable about what they can and can't do, they'll be more open to being able to provide loans to those that they otherwise wouldn't have because of a credit score or whatever reason. Now, the reason why, of course, they're requiring credit scores to be higher is because essentially someone with a higher credit score is less likely to be in default. But I think that is a myth in this particular case, because it doesn't matter what your credit score is. A lot of people got laid off, whether they had a 500 credit score or 850 credit score. If you're laid off and you don't have income, then you don't have income. The one thing I think may be different is that those that have higher credit scores, and the way banks may look at it, is that they may be more likely to save or have a nest egg and be able to weather the storm. Of course, I'm going to stay really close to the news and figure out how this thing is going to play out, and I'll keep you informed. And if I have any updates, I'll definitely let you know. But until then, if this information is helpful for you or those that you work with, if you're a real estate agent, please like and subscribe, and I'll continue to put the content out. That's all for now. You guys be safe. We'll talk to you soon.